Swan is a Bitcoin focused company, and I have to know we've spoken a couple of times before, but it just seems like this treasury accumulator trend has really blown up in the weeks that since we've spoken. What do you make of it?
It really has. And it's starting to feel like it's a more recent phenomenon to people than it really is, given strategy really launched this in 2020. But it wasn't until we had some shifts in the regulatory environment that companies felt safe coming out and taking this approach and following the lead that Michael Saylor brought. So really over the last 12 months, you've seen this huge emergence of companies entering the market. And one of those, you just had a new announcement this week. Sequans out of France announced $384 million raise to start their Bitcoin treasury. And so you are seeing the pace accelerating here. And a lot of that is going to be due to the response that you've seen from the market from the prior companies that have adopted this trend.
How do you see this market starting to, how do you see the market or the segments within this group starting to play out? Because you mentioned MicroStrategy right up front. Not all of these companies are going to become MicroStrategy, if only because of their early advantage. But how do you see the segmentation going?
It's been very interesting because MicroStrategy really is the only one that's achieved significant scale. So when people look at the market right now and they think that maybe it's becoming saturated, what they don't realize is there's really only one significant player in the market, and that is Strategy at the moment at $120 billion market cap with more than $65 billion of Bitcoin on the balance sheet. But now what you're starting to see is investors are looking for that hypergrowth opportunity that Strategy provided in the early days. So one of the metrics that came out around these treasury companies is called Bitcoin yield. And what that effectively is the rate at which a company is accumulating Bitcoin per share. And what you start to see over time is that investors start to get smart about the trends that are at play here. And so they're seeing new companies emerging into the market where they see that hyper growth in the Bitcoin per share in front of them, and they're starting to rotate capital into some of those companies to try to find that 5 or 10x opportunity that a lot of them may feel that they missed with strategy early on.
What kind of investor does this appeal to? And again, it's become so much more interesting because all of the strategies that we're seeing in these announcements have evolved and diversified. So is this still something for investors who already have a base thesis around Bitcoin and are Bitcoin believers? Or do you see a scenario where retail investors start to join the party and kind of FOMO in through these new equities that are hitting the market?
Well, the beauty of these companies is that they're launching securities that appeal to a wide range of investors. So clearly with a company like Strategy at their scale, a lot of that investment is coming through the institutional channels. But it doesn't mean that retail is not also playing a part here. Particularly in the derivatives, you see a lot of the retail investors participating where they want that high octane version of Bitcoin returns. But when you start to see what Saylor's doing with launching some of these preferred equities, and you saw it early on with the convertible bonds that they were issuing, those are specifically tailored products to appeal to the institutional investors. And the reason is that there's a huge market out there for that. So in one of the recent presentations, they showed there's $100 trillion of institutional capital that can only allocate to equities or to credit products. And so these Bitcoin treasury companies, because they're holding this Bitcoin on their balance sheet, they can securitize around that balance sheet and tailor products that are made to attract those types of institutional investors. So there's been a rapid evolution. It really did start as a retail-focused investment early on, but now you're seeing that trend shift and it's much more institutional players in the market.
It seems like forever ago since the Bitcoin ETFs launched, which was just last year. And it seems like now ETFs, by comparison, have become a little bit restricted, if I may say. People are looking for yield. There isn't an index. You can't use those assets in an on-chain capacity. Can you talk about the opportunity for institutions of the Bitcoin ETFs versus this new cohort of companies that we've been talking about?
Yeah, I think the ETFs originally were the very safe investment choice, right? It was in a BlackRock wrapper, essentially, which makes it feel very familiar. It's a familiar product that they can participate in, and they know that they're going to be able to deploy a significant amount of capital through that channel. Early on with the Bitcoin treasury companies, there wasn't enough scale. There wasn't enough liquidity in these equities for them. But over time, that is corrected. And now you see Strategy constantly in the top 5 in terms of volume being traded around that equity. That opens up more opportunities. And because there's so many products being launched underneath one equity or this basket of equities with the Bitcoin treasury companies as the new ones scale, you're starting to see broader opportunities where they can customize their exposure in the way that fits their mandates. So I think you're going to continue to see institutional capital pouring into these equities for the foreseeable future. And you're also seeing it as a part of launching some of these Bitcoin treasury companies. You're seeing a lot of participation in the pipe deals and in the convertible bonds that are being issued as new entrants into the market are trying to achieve scale to really kickstart the treasury strategy in a way that MicroStrategy had to do organically. Some of these other ones are getting to scale quicker, which is going to help them evolve in how they deploy the playbook and how they create those products that are going to be targeted towards those institutional investors in particular.
Do you see these new companies outperforming the price of spot Bitcoin this year?
I do. I do. Yeah. I mean, when you're able to apply leverage against Bitcoin, that's really the entire design here. So what they do is they try to create heightened sensitivity on their balance sheet to Bitcoin. And what they're doing is they're harnessing the volatility of Bitcoin. Volatility is no longer a risk for Bitcoin treasury companies. It's the core engine that's driving everything that's making this possible. So when you combine volatility with the compound annual growth rate that Bitcoin has seen in the 20 to 30% range, it gives you the ability to really jumpstart your strategy and really perform. So applying that leverage gives you heightened sensitivity to the movements of Bitcoin itself. And that's why you've been able to see these companies outperform with many of the products that they're offering. But what the market's starting to digest now is that not all of the products are going to be the high octane products that are trying to outperform Bitcoin's already impressive returns. What they're starting to do is use the ability to securitize around the balance sheet to tailor make products in a way that appeals to all different risk appetites. Whether you really do want the volatility and you're going for that 5 to 10 times outperformance, you could go to the derivatives market. But now you've got the fixed income products also coming out, which are specific to yield-focused investors. And so you're seeing an evolution of this playbook, and it's making it really broad, where not everybody's coming for the massive outperformance of Bitcoin. Some people want those yields that are coming out of these preferreds or out of the bonds, but there's still a huge cohort of investors that are looking at this as a way where they're going to attempt to outperform the performance of Bitcoin, and these companies need to be very strategic in how they apply that leverage in order to accomplish that goal.
What kind of client interest are you guys seeing in these companies at Swan?
We're seeing significant interest, and it's picked up a lot in probably the last 4 months. Really what you see is that out there in the market, there's an education gap that's out there and a talent gap. So as companies are starting to evaluate this, it's difficult to find the expertise for launching a Bitcoin treasury company. And because of that, they're starting to reach out to the Bitcoin native corporations that are out there, Swan Bitcoin being one of them. Our entire business forever has been around educating on Bitcoin, and we're also building the world's #1 Bitcoin wealth platform. And because of that, we have the expertise in acquiring Bitcoin and custodying Bitcoin. We've been at the forefront of these Bitcoin treasuries forever. People within our organization, myself included, have been equities analysts around these Bitcoin treasury companies. And because of that, we can help them to fast track that opportunity for themselves. There's a lot of complexity when you start thinking about how am I going to structure my risk? How am I going to manage the risks across my organization? Put the right governance framework in place to make sure that we have the rules of the road set before we embark on bringing any additional leverage into our business to make sure that we're executing effectively.
So, final thing, we've never had so many different ways to get exposure to Bitcoin, which I suspect is probably still good for the price of Bitcoin for its performance. Is there a downside or are there risks in terms of, I don't know, network usage or adoption of the Bitcoin technology? If you have all of these people who may not care about the crypto technology and just want the exposure to the price, if they can get it from an equity, why use the crypto technology? Is that a conversation that ever comes up?
Not very often, because usually when people start going down this journey and they start learning about Bitcoin and what it is that's driving these equities, it causes people to evaluate that underlying commodity of Bitcoin and what are the characteristics of it that make it so valuable to corporations and as well to nation states, as you've seen a lot of those announcements that came out over the last year as well. What they tend to do is they start to look at it and go, what problem is this solving for corporations that it could solve for me? Particularly when we've seen things like the new spending bill that just came out that's going to add another $3 trillion to the deficit. One of the core utilities around Bitcoin right now is the ability to outpace monetary debasement. And that's a problem that everybody faces. It's individuals face it, corporations face it. And when you have an unlimited supply of a currency that's going to need to be printed to handle the amount of spending that's going to be entering the market, investors are now looking for what is the opposite side of that. I need something with defined scarcity. I need 21 million Bitcoin is all that's ever going to exist. And because of that, there can be infinite demand for Bitcoin, but it's not going to increase the supply. With almost every other product out there, if the demand increases, the supply is going to increase. They're going to create more of it. So Bitcoin is totally inelastic to the demand, which means the only thing ultimately that can give is going to be the price. So people who are out there working very hard in their day-to-day jobs and they're creating value for themselves, they're looking for ways to take that value out of a system that they feel is mistreating them. It's devaluing what they've worked so hard to earn, and they're constantly turning to Bitcoin now as the solution for that.